For decades, the United States has been the center of global wealth, the land of opportunity, where investors from around the world parked their money, bought stocks, and trusted in the stability of the dollar. But something is changing. Quietly, behind the headlines, a massive shift is underway. The world's richest investors, billionaires, hedge funds, and global institutions are starting to move their money out of America and into new, emerging markets. Why? What are they seeing that most people don't? To understand this, let's start with what's happening inside the US economy. For years, the American financial system has been built on the idea that the dollar is king, the safest, most reliable currency in the world. But as government debt soars, inflation remains stubborn, and the Federal Reserve continues to print money to keep the system afloat, many wealthy investors are beginning to question how long that dominance can last. In 2008, the world witnessed how fragile even the strongest financial systems could be. Trillions of dollars vanished overnight, and governments had to step in to save the day. But what few noticed back then is that this set a new precedent, that the US economy, once driven by productivity, was now being propped up by borrowing. Fast forward to today, and that debt has exploded. Trillions more have been printed. The cost of living is higher than ever. And investors who once saw the US as the safest bet are realizing that safety might just be an illusion. So where is all this money going? It's not just moving to one place, it's moving to many. Countries like India, Vietnam, Indonesia, Brazil, and even parts of Africa are seeing huge inflows of foreign investment. These are regions with young populations, growing economies, and massive untapped potential. While the US struggles with aging infrastructure, political gridlock, and economic inequality, these nations are building, expanding, and innovating at a rapid pace. Let's take India, for example. Its tech sector is booming, its middle class is expanding, and global investors are pouring in billions. Vietnam has become a manufacturing powerhouse, benefiting from companies moving their supply chains out of China. Brazil is rich in natural resources, and investors see it as a key player in the new green economy. Even the Middle East, once dependent on oil, is transforming its wealth into futuristic cities and high-tech industries. The story is simple. While the old world is slowing down, the new world is waking up. But make no mistake, this shift isn't happening because people hate America. It's happening because smart money follows opportunity. Investors are realizing that the US no longer has a monopoly on growth. For decades, America's stock market outperformed everyone else's. But in the last few years, cracks have started to appear. High interest rates are squeezing businesses. The cost of borrowing is rising, and political polarization is making long-term policy decisions almost impossible. From a purely financial point of view, the risk-reward equation has changed. Meanwhile, emerging markets offer something that the US can't right now: momentum. Populations that are hungry to build, governments that are encouraging investment, and industries that are still in their early stages. For wealthy investors, that combination is irresistible. Another key factor behind this big money shift is de-dollarization. For decades, global trade has depended on the US dollar. But now, countries like China, Russia, and members of the BRICS alliance are pushing to use their own currencies for trade. They want independence from the US financial system, and they're building new ways to move money that don't rely on the dollar at all. This might sound small, but it's a big deal. If fewer countries need the dollar, demand for it drops. And when demand drops, its value, and the power that comes with it, can start to erode. We've already seen signs of this. Central banks around the world are buying gold at record levels. Sovereign wealth funds are diversifying their reserves. Even US allies are quietly reducing their exposure to American debt. It's not panic, it's preparation. For regular people, this might sound distant, but the effects are real. When global investors pull their money out of US assets, it can weaken the dollar, drive up inflation, and make imports more expensive. Over time, that could mean higher prices for everyday goods and less global influence for the US economy. It's not a crash. It's a slow, quiet shift in power. But here's the other side of the story. In every major change, there's opportunity. When old systems weaken, new ones rise. The investors who understand this shift aren't panicking. They're adapting. They're looking for new ways to protect and grow their wealth in a world that's becoming more decentralized and digital. And that brings us to something else: the rise of alternative assets. Cryptocurrencies, for example, are becoming part of this new financial landscape. 10 years ago, Bitcoin was dismissed as a fad. Today, it's being taken seriously by hedge funds, pension funds, and even governments. Why? Because it represents something that traditional systems can't offer: independence. It's not controlled by any central bank, any government, or any country. In a world where trust in traditional finance is fading, that independence is powerful. Think about it. If the global financial system is changing, if money is flowing out of old markets and into new ones, doesn't it make sense to look at assets that don't depend on any single nation or policy? Bitcoin and other decentralized technologies are part of that shift. They're not just speculative tools, they're a new form of financial freedom. But let's not oversimplify. The rich moving their money abroad isn't just about greed. It's also about survival. When you manage billions, your job is to stay one step ahead of the storm. Inflation, debt, political uncertainty, all of these are signs of an aging system. And while most people are focused on short-term ups and downs in the stock market, the ultra-wealthy are thinking in decades. They're repositioning before the rest of the world catches on. Still, this doesn't mean the US is doomed. America remains a global leader in innovation, technology, and entrepreneurship. It still attracts brilliant minds and has some of the world's strongest companies. But even those companies are expanding globally. Apple, Tesla, and Google are investing heavily in India, Southeast Asia, and Africa. It's not because they're abandoning the US. It's because they see where the future growth will come from. So, what does this all mean for you, the everyday person watching this? It means that the world of money is becoming more global, more digital, and more unpredictable. It means the rules that worked for your parents and grandparents might not work for you. And it means that understanding where the big money is moving and why could make the difference between staying ahead and being left behind. If you've ever wondered why the world feels like it's changing faster than ever, this is part of the reason. Power is shifting, not just politically, but financially. For the first time in decades, wealth is spreading out instead of concentrating in one place. And that's creating a whole new map of opportunity. The bottom line? The big money shift isn't just about rich investors chasing returns. It's about the world redefining what wealth means and where it comes from. We're moving from a system built on control and centralization to one built on connection and innovation. From printed money to digital assets. From one dominant market to many rising ones. It's a transformation that's only just beginning, and those who understand it early will have the biggest advantage. So as the world's wealth quietly moves across borders and into new frontiers, one question remains. Will you move with it or be left watching from the sidelines? What if your money worked as hard as you do? The Bitcoin difference isn't just about technology. It's about freedom, transparency, and taking control of your financial future. Because while the old system depends on trust, the new one is built on proof. And in a world that's changing faster than ever, that might just be the biggest shift of all.